Hello guys, we are going to discuss today CVP analysis and our topic is we are going to talk about target income calculations. So this is going to be almost the third video for CVP analysis. In the first video, we discussed how to calculate the break-even point. And in second video, we discussed break-even point in dollars. Okay, in the same video we discussed about the break-even point in units and break-even point in dollars, and then we discussed what margin of safety. So this is what is we are going to talk about today, break-even analysis, but with the target income calculation. So target income mean to say, we can say in simple words, like here we are going to decide how many number of units we should sell to generate the expected level of target income. Target income means say operating income. So formula is very simple. So we are going to talk about formula as we discussed for the break-even analysis in units. What was the formula? The formula was, if you want to calculate break-even point in units, so the formula was we took total fixed cost as a numerator and we divided with the unit contribution margin. Unit contribution margin means say selling price per unit minus what? Variable cost per unit. This is called what? Unit contribution margin. Unit contribution margin is also known as contribution per unit. So what we are going to do? So here what we are going to do here, simply in this formula, we are going to add one thing extra in the numerator, that is called what? Operating income. Target operating income. So if you will add, okay, target operating income with the fixed cost, and denominator is going to be the same. We want to take unit contribution margin. So this will give you what? Break even, not break even point in units. So this will give you what? This will give you target income in units. So what it means, let me just quickly guide you. Like usually when we prepare income statement by using variable costing, which we apply the concept here, we always take sales, then we deduct all variable cost. This is called what? Total contribution. From total contribution, we deduct here fixed cost. So then we will get here operating income. Okay. So operating income. So operating income, for example, our target operating income is $10,000. Let's assume it is $10,000. So what we want to decide, like if you want to achieve this target income of $10,000, so how many units we have to sell? Obviously, those units, we will write it here, units multiply by then selling price. Okay, because these units we are deciding, like how many units we have to sell, that should leave a profit of $10,000. So this is the idea on the back end. So simply what we are going to do, we are going to apply this formula. We will take fixed cost plus target operating income divided by unit contribution margin. So this will give you number of units which we need to sell to generate this much target operating income. We will prove it with the examples. Here we have example. So very first simple example, then we will move case-wise case. So here we have a manufacturer's product has a unit sale price of $0.6 and it has unit variable cost of $0.2. Okay, so we have here fixed cost are $10,000. So question is how many units must be sold to generate $25,000 of operating income. Like here, how many units we have to sell which can leave the profit of 25,000. Okay, profit means operating income. So how it can work? Very simple idea. First of all, in first step number 1, we will calculate unit contribution margin. So how unit contribution margin is calculated? We always take unit selling price, which is here given 0.6. We'll deduct here unit variable cost, which is given here $0.2. Okay, so this will give you unit contribution margin of 0.4. Now we'll apply the formula for the target operating income in units. So what is the formula? Formula is fixed cost plus target operating income, and we'll divide with the unit contribution margin. So as you can see in the question, fixed cost is given 10,000. We'll add here 25,000, which is your target operating income, and we'll divide with the unit contribution margin, which we have calculated here. So if you will do this, if you will apply this formula, so you are going to get here 87,500 units. It means if you would sell 87,500 units, so that can leave a profit of $25,000 for you. So let's produce the income statement and let's prove, like if we would sell 87,500 units, would it leave 25,000 of operating income or not? So we can prepare shortcut income statement. So first we will write here sales. So how many units we have here? 87,500 and selling price is 0.6. Selling price is given here. Okay, we will multiply on the calculator. So it is going to be 87,500 times 0.6. It is going to be $52,500. Then we'll deduct a variable cost. Again, we'll take same units, 87,500 multiply by variable cost of 0.2. So it is going to be 17,500. If you will deduct here, so you will get a total contribution. So your total contribution is going to be $35,000 here. And from there, if you will deduct here fixed cost, which is given in the question, 10,000. It is given somewhere here. It's given here $10,000. If you will deduct $10,000, okay, so this will leave the operating income of 25,000. Okay, this is your operating income. So it means we have to sell 87,500 units, which can leave a profit or operating profit of 25,000. And this was the cross check just to prove the calculation is correct or not. Now, guys, we have here some time because there are various cases are there which we need to understand. Now, sometimes they will ask you about target net income. Okay, like target net income in units, like how many units we should sell which can leave a specific amount of net income. Net income mean to say it's always about it is always after tax. So let me quickly tell you. Now your income statement will look like that. So we'll write sales minus what variable cost. So this will give you total contribution. Okay, from there you will deduct here fixed cost. Okay, this will give you operating income. Operating income is always before tax. From there you will deduct a tax. So this will give you what? This will give you what? Net income. So now this is what we are trying to learn, like how many units we have to sell which can leave a specified amount of net income. Net income and say the income after tax, simply operating income minus tax, this is equal to net income. So now in the previous example, our focus was on operating income. Now our focus is on net income. So let me guys quickly tell you, because there is nothing special in this formula. It is all about logic. For example, what we assume here, for example, if our, I'm just assuming, if our operating income, let's assume it is $10,000 and our tax is 30%. So we'll take 10,000 times 30%, it is going to give you 3,000. So it means your net income is going to be 7,000. Now, please remember, in your exam question, he will tell you the net income, net income. Okay, like this much net income you want to generate. So tell me how many units we have to sell. So simply what we will do, simply this net income, we will convert back to the operating income. And how it will be converted, I'm showing you. So first, simply we have to convert this net income back to the operating income. But you don't need to convert it automatically. Once you will apply the formula, which I'm going to tell you, that formula will convert this net income to the back to the operating income. So how it is converted, by the way, I'm just showing you logic. For example, we always assume this value equals to 100%. If tax rate is 30%, so this is equal to 30, and the net income will be equal to then 70%. So if net income is given, for example, if net income is given, net income which is 7,000, if I will divide with 1 minus tax, okay, so 1 means 100%, tax mean to say tax percentage. For example, 1 minus tax is what? Tax is your 30%. So I'll write it here 0.3. Obviously, if I will remove the percentage from the 30, like 30%, I have to divide with 100. Percentage will be removed, so it will become 0.3. So it means if I take net income divided by 1 minus 0.3, 1 minus 0.3 equal to 0.7. If I divide 7,000 with this 0.7, automatically you will get answer here 10,000. Okay, this 10,000 actually is what is your operating income. So this is the logic which we are going to discuss. Actually, it is the same formula of operating income, but we have to convert net income back to the operating income by applying this formula. Here we go. So we have here target net income in units, like how many units we have to sell which can leave the profit of specified amount of net income. So this is the formula, guys, you will apply. You will always take fixed cost plus. So here what we are doing, here we are taking net income divided by 1 minus tax rate, as I was giving you idea. So once you will divide net income divided by 1 minus tax rate, actually, so this formula, this portion will convert the net income back to the operating income. Okay, so it means simply what we are doing, we are taking fixed cost plus target net income divided by 1 minus tax. So once you will apply this side, it is automatically converting your net income back to the operating income. And then you will divide with the unit contribution margin. So automatically you will get number of units which we need to sell, which can leave the specified or target amount of net income. So let's have a look now. We are assuming the same example. For example, like from the previous example data, we are taking same data. Only one requirement we are changing now. So what we are doing here, so we are assuming, for example, our selling price is $0.6. Our variable cost is $0.2. Our fixed cost is $10,000. But now instead of operating income, we are given with the net income. And for example, net income is for example $30,000. You want to generate $30,000, okay, of net income. Now you have to tell how many units we have to sell, and tax rate we assume it is 40%. So what we will do, very simple idea. We'll apply this formula. We will take what this formula we have to apply. What is the formula? So you want to calculate units which you need to sell. You will take fixed cost. Okay, fixed cost plus net income divided by 1 minus tax. Okay, so and divided by unit contribution margin. Unit contribution margin, we know unit contribution margin is selling price minus variable cost per unit. Selling price is 0.6, variable cost is 0.2 in the question. So it means unit contribution margin is 0.4. So fixed cost is 10,000. Fixed cost is going to be 10,000 plus net income. How much is there? Net income of 30,000. I'll take plus 30,000 divided by 1 minus tax. Tax rate is how much? I guess it was 40%, right? 40% is the tax rate in the question. So 1 minus 0.4. So if you will simply now solve it, let's solve it. First, I'm going to solve now this way. We have a fixed cost of 10,000 plus. Now I'm going to solve this area. So what I'll do, I'll take 30,000, which is your net income, divided by 0.6, because 1 minus 0.4 is equal to 0.6. Understood? So if I will divide, this will give you 50,000. So divided by what? Unit contribution margin 0.4. Okay, 0.4, this one. So now if you will solve it, so you can get the answer. So numerator will become 60,000 divided by 0.4. So what is the answer? 60,000 divided by 0.4. It is going to be 150,000 units. If you will sell 150,000 units. Now let's prove, because it means we have to sell 150,000 units, which can leave the profit of net income of 30,000. Okay, let's prove it now. So here we can prepare the income statement. First, we will write sales. Sale, how you write? 150,000 units into 0.6 is the selling price. It is going to be $90,000 of sale. We'll deduct your variable cost, which is 150,000 units. The variable cost per unit is given in the question as 0.2. So we'll take 150,000 multiplied by 0.2. It is going to be 30,000. So here what is left now? 60,000 is your total contribution. From there you will deduct fixed cost. Fixed cost is given in the question as 10,000. This will give you operating income as 50,000. From there you will deduct tax. Tax is 40%. We'll apply 40% of this value. So it is going to be 50,000 times 40%. It is going to be 20,000. So once you will deduct tax from operating income, this is going to be your net income, which is how much? 30,000. So this is what was the requirement. It means we have to sell 150,000 units, which can leave the net income of 30,000. I hope so it is clear. Now, guys, we are going to talk about some other target income situations. Sometimes you have to solve question by applying different equations. Okay, these are alternative ways. Please remember here. Okay, so for example, if you will look at here, operating income. Operating income can be calculated by applying this equation also, right? In if you will look at your normal income statement. So what is the equation? So we write first sales. From sales, we deduct what? Variable cost. This is called your total contribution. From total contribution, if you will deduct fixed cost, this is called your operating income. So it means in shortcut, I can say sales minus variable cost minus fixed cost is equal to what? Operating income, right? So this is the equation which is written here. So operating income is always equal to sales minus variable cost minus fixed cost. This is known as your operating income. But at some time this equation you need to apply, guys, okay, to solve the question. So here we go. Let's have a look how this can help you. Okay. Now, for example, I'm going to explain this concept with the help of example. So here, for example, they told you if units are sold at $6, this is the sale price, and variable cost are $2. This is the variable cost. Okay. It means unit contribution margin is 0.4 because as $4, 6 minus 2. How many units must be sold to realize the operating income of 15%? Actually, 15% of what? In exam, we will tell you statement up to this. Like how many units we have to sell, which can leave the operating profit, and that operating profit will be 15% of your sale. Okay, this 15% you will always apply on sale. Okay, so now look at the question here. He told you selling price, he told you variable cost per unit, and he's asking you how many units we have to sell, which can realize the operating income of 15%, 15% of revenue, 15% of sale. Okay, now what here? Uh, this operating income obviously we are calculating before tax, and our fixed cost is how much? 37,500. Now, guys, if this is the question, like he's asking you answer specific in percentage, like 15% of sale or 20% of sale you want operating income, then this equation will help you. Okay, so now we will apply this equation. Just we are writing this equation and see how data can be solved. So first of all, guys, this 15% means a 15% of sale price. Okay, sale price, or 15% of revenue, because here revenues total are not given. So because number of units we have to calculate. So actually sale price per unit is given. So what I'll do, first thing, I have to take 15% of selling price per unit. So if I'll take 15% of selling price, it is going to be $0.9 per unit. First thing I need to calculate this. In exam, this will not be given. You have to work. In exam, this percentage will be given only. Okay, so you have to work. So you got here $0.9 per unit. It is the operating income. Okay, because we took 15%, which is operating income of selling price. Understood? It is going to be 0.9 per unit operating income. Okay, now what is how you would solve? You will write that equation, and mathematically you have to solve this equation. So write this equation. We have here operating income is equal to sales minus variable cost minus fixed cost. Great. So we know the operating income equation is what? Because quantity we want to calculate, right? How many units must be sold? This is what we want to calculate. So that is why now I'll write this equation. Operating income is what? He told you $0.9 per unit of quantity, right? So I'll write it here, 0.9 multiplied by quantity. This will give you what? Operating income, right or wrong? Because it is 0.9 of quantity. Okay, dollar per unit. 0.9 is per unit. Operating income, quantity we have to find. Quantity we have to find. So this will be the left side of equation is equal to what? Sale is what? So we have sale price per unit multiplied by quantity. This will give you total value of sale. Then minus variable cost, 2, which is given here, 2 multiplied by quantity. This will give you total variable cost. Minus what? Fixed cost. Fixed cost is given 37,500. Now you can solve, guys. It is very easy. How you can solve? Obviously, all Q's we can move to the one side of equation. For example, if if this is 0.9 q, this 0.9 q, 0.9 q. Okay, this is 0.9 q. Okay, so these values 6q and 2q, we will move to this side. This 6q is the positive value, it will become minus 6q, and this is the minus value, it will become plus 2q. Understood? So equals what? Equals 37,700. Equals 37,500. Okay, now if you will solve this side, this is minus 37,500. Okay, if you will solve this side, so uh, plus 0.9 minus 6q plus 2q, it is going to give you 3 minus 3.1q is equal to minus 37,500. It's math only. This minus, obviously, guys, this minus will be crossed. So now q I want to find out. So I'll take 37,500 divided by 3.1. So q would be equal to what? 12,097 units. It means if you would sell this much number of units, okay, then that can leave the operating income of which will be equal to 15% of revenue. So let's have a look now. So let me apply through the question now. First of all, I'm writing just income statement. Sales less variable cost is equal to total contribution. Just I'm proving now, minus what? Fixed cost is equal to operating income. Okay, and I'll prove now. Look, so first of all, guys, sales. How many units we have to sell? 12,097 units, which we calculated here. Multiply by selling price is $6. If I will just multiply, let me just multiply. So we have a 12,097 multiplied by 6. It is going to be 72,582. We'll deduct your variable cost for same units, 12,097 units. And variable cost, I guess it was 4 or 2. 2. It is 2. Okay, 2 here. So multiply by 2. This will give you variable cost. 12,097 times 2. It is going to be 24,194. If you will deduct, this will give you total contribution. So we have 72,582 minus 24,194. So it is going to be 48,388. You have to just cross check the calculation because I'm just doing on calculator now. There could be some mistakes. So fixed cost is given. Fixed cost is how much? Here is given 37,500. 37,500 deducted. So we have here minus 37,500. So it is going to be operating income 10,888. This is the value. Now look. So what was in the question? He told you your operating income is 15%, right? 15% of what? Of sales. Of sale. So 15% of sale. If I'll take this sale value, which is 72,582, it should leave the operating income of 10,888, which is exactly this value. Understood? It means you have to sell this much number of units, okay, which can leave the operating income of 15% of sale. And you can prove here this 15%. If you will take 15% of the sale, so this will be equal to this value. It should be equal. Obviously, if it is not equal, it means we made mistake maybe in calculation. Let's try 72,582 times 0.15. Yes, so it is almost 10,887.3 something. Okay, so it is almost same value. Okay, guys. So then let me finish first, then I'll take your questions. Now here, okay, so we can write this guy's equation also. Please see, this equation can be written this way also. So there is another way to write the same equation. Please just focus me what I'm saying. Because all possible ways you need to know, guys. Now. This side, this equation can be written this way also. I'm telling another way now. Okay, it can be written this way. What is the way you can use? So what is the way you can use? So this would be the way, like your sales value should be equal to a variable cost plus fixed cost plus operating income. Okay, operating income. So this is the same thing I'm writing this way or this way. Like obviously, if you want to get the sales value, right or wrong from the first equation. So then equation will be like that: sale is equal to variable cost plus fixed cost plus operating income. Right? Sometimes they solve the questions by applying this equation. So don't worry, it's the same thing. Then we have here, now let me tell you one more thing here. It was about operating income. Now again, the same equation can be applied, okay, after to calculate after tax net income also the equation. But now equations, what equation I will follow? So I will follow now this equation. What equation? I'll follow this equation now. Sales, which I told you is equal to variable cost plus fixed cost plus operating income. Okay, but in exam, if he told you net income, like you want to calculate net income, you know this net income, we have to convert back to the operating income. And how it is converted back to the operating income, you know. So if net income is given, so this side can be written like that. If net income is given, so we'll take net income divided by 1 minus tax. Actually, this formula will convert your net income back to the operating income, and then plus fixed cost plus variable cost is equal to sales. So this is what is going to happen. So here we go. Let's have a look with the same question, same data I'm using, but just I'm replacing the word the operating income with the net income. Now, what will be the equation? It will be the equation will be what? Sale is equal to variable cost plus fixed cost plus net income divided by 1 minus tax. Okay, this net income divided by 1 minus tax. Actually, this is converting back to the operating income. Okay, so then this equation you have to follow if net income is given. So here we go. For example, a variable cost are $1.2. This is variable cost. Fixed cost are $10,000. Selling price is $2. Okay, the company targets are $5,000 after tax profit. This is net income actually because it's after tax. Okay, when the tax rate is 30%. So now you want to see how many you want to calculate how many units we have to sell, which can leave, which can leave the which can leave this much net income. So now what equation I'll follow? I'll follow this equation. Sale is equal to variable cost plus fixed cost plus net income divided by 1 minus tax. So here we go. So this is what sale, because quantity you are calculating how many units you have to sell, right? That's why we'll write here first sale. This is sale, sale. Sale price is what? Sale price is given here. Selling price 2. It means 2Q is the sale. Q means a quantity. Okay, then we have equals. Here he wrote first this portion. This portion he wrote first. So 5,000, which is your net income, divided by 1 minus tax. Tax is how much? 0.3. Okay, 30%. Plus 1.2Q. 1.2Q reflects variable cost. The reason, because 1.2 is your variable cost. Q we are finding. Plus 10,000. 10,000 is your fixed cost. It is given here. Where? Here, 10,000. So plus fixed cost. Understood? So it means sale is equal to, this is net income divided by 1 minus tax. Okay. Plus variable cost plus fixed cost. This is the question. Now just you have to solve it, guys. So if you would help me, so first solve this side. So 5,000 divided by, let's try. Let me try. So 5,000 divided by 0.7. So it is going to be 7142.85 or 86. This value. This value. Okay, now what? Plus 10,000 this one. Now because this 1.2Q we are moving to this side of the equation. So 2Q minus 1.2Q, it will be equal to 0.8Q, right? I am assuming you know the math, right, guys? Okay, it will be 0.8Q. So 0.8Q is equal to this plus fixed cost. Now I'll add these two values. Okay, this will be equal to this value. Then 0.8Q. So Q I want to find, I'll take this value divided by 0.8. So this is going to give you quantity. Now you can just prove, it is proved here, because if you will sell this much number of units, it will leave after tax income of 5,000. We can prove here through the income statement. So let's have a look. First we'll write sales. I'm taking same units as rounded value. Okay, rounded value 21,429 multiplied by selling price is 2. It is equal to this much sale. Deduct here, we'll deduct variable cost 21,429 Okay, times 1.2 is the variable cost per unit. So this will be your total variable cost. Then this is equal to a contribution margin. Otherwise, you can start question from contribution margin also. How? Unit contribution margin is how much? Sale price is 2, variable cost is 1.2, unit contribution margin is a 0.8. 0.8 directly I can multiply with this units 21,429. So it will give you total contribution of this much. So you can start from the contribution also. There are various ways. So we'll deduct your fixed cost, which is 10,000. This is equal to operating income of 7,143. From there, we'll deduct tax of 30%. We will take 30% of this value. Okay, so this will give you what? 2,143. If you will deduct tax from operating income, this is going to give you net income of 5,000. I hope so it is clear. Now, guys, I'm going to tell you there is another way of question. This question was easy, so let's have a look. This question, this is small, but it is tricky. So here we go. I'm going to explain it with the help of solutions. Here we go. A company invested, this is the value of invested, okay, $300,000 in a new machine to produce cones for textile industry. Okay. Variable cost are 30% of selling price. It means whenever percentages are given, for example, operating income 15% of this, 10% of this, or variable cost 30% of selling price. So then it means you have to apply equations. Equations like sales is equal to net income or operating income plus variable cost plus fixed cost, like that. So here we have here equation you have to apply. So variable cost is 30% of the selling price. Okay, great. Now here they're telling you the fixed cost are 600,000. Great. Company has an effective income tax rate of 40%. So now look at the requirement here. Requirement is tricky. They're saying the amount of sales. He's not asking amount of number of units or amount of sale we have to calculate. Okay. Amount of sales required to earn 8% after tax return on investment. So here he specified like you want, you want after tax return, you want like you can say after tax return, you can say like net income you want, for example. But this should be 8% of investment value. Investment value is how much? 300,000. So it means he's asking you what amount of the sale should be there, which can leave a 8% after tax. Okay, 8% after tax return on its investment. So now this question is very small, but it is really tricky question. So here we go. Now again, we have to take the help of equations, not the formulas, equations. So how equation is going to be? So equation is derived here. Look. So first we have to take here, for example, this equation, we'll write it here. This equation we will write. Okay, this equation, look at it. We'll take sales minus variable cost minus fixed cost. Like if you are taking sales minus variable cost equal to total contribution, by the way, minus fixed cost, it's equal to operating income, right? It's equal to operating income. Okay, from there, if I deduct tax, this is like my net income. Okay, now look at here. So what I'm going to do, we want after tax return, like net income, you can assume. First with this, we will convert to the operating income. And I told you the formula. Formula is what? So look at here, sales minus variable cost minus fixed cost. It should leave this much net income or return on investment. And return on investment is what? Return on investment divided by 1 minus tax. Okay. Instead of net income here, the word they used what? Return on investment. They used return on investment divided by 1 minus tax rate. Like if you take net return on investment divided by 1 minus tax rate, actually you are converting post-tax return on investment to the pre-tax. Like as you're converting net income back to the operating income. So same here, if you apply this formula, so you take return on investment divided by 1 minus tax, it is converting after tax return on investment to pre-tax return on investment. So again, see, so what will be the equation? Sales minus variable cost minus fixed cost, it should be equal to this return. It should be equal to this return. Like when you will take sales, from the deduct variable cost, deduct fixed cost, this much profit should be left there. This is what is the question, right? He want 8% of investment. Okay. After tax as a return. So here we go. So we're writing here sales, because sales value we have to calculate. He's asking about sale. That's the sales will be the same. 0.3 sales. What is 0.3 sales? 0.3 is the 30%, because variable cost is is 30% of selling price. So that's a variable cost is written. So I'll write it there, 0.3 of sale. This is actually variable cost. Minus fixed cost is given in the question, $600,000. So then equals what? 0.8, because 8% of investment value is your post-tax return on investment, right? 8, because return on investment is 8%. It is, go back to the question. Look at it in the question. So it is given here. 8% after tax return on its investment. Investment value is 300,000. So that's why it's written here 8% of, or 0.08 of 300,000. This is return on investment divided by 1 minus tax. So if you will solve it now, a sales I want to calculate, because this sales means it's 1 is here, right? Mathematically. So 1 minus 0.8 is going to be 0.7 sales minus 600,000 equals, if I'll solve this, 0.08 times 300,000, it will give you this much return on investment divided by 1 minus 0.4 is equal to 0.6. Solve it now. Again, 0.7 sale. This 0.7 sale, we wrote it here. So now what we'll do here, guys. So if you will solve first this value, 24,000 divided by 60.6, and then this, add this value also. Add this, because this minus will become plus here. So just add it. Let's do it. 24,000 divided by 0.6, it is going to be 40,000 plus 600,000, because this minus once you will move to the other side of equation, it will become plus. So total going to be 640. Now I want to calculate sales. So I'll take 640 divided by 0.7. 640 divided by 0.7, it will give you 0.7. It will give you value of sale. So it means this much sale should be there. This much sale should be there, which can leave the net in return on investment 8% on return on investment. Okay, so this is the actually answer. So this is how you will solve it. So I told you guys all possible ways which can be tested here regarding operating income.